Today, more and more homeowners in America are behind on mortgage payments. Rather than just walking away, it's important to know your options. Foreclosure can be avoided, your credit can be saved, and your financial future can be salvaged. What are the options? Well, that's what Riley is facing. Riley bought a house with $300,000 borrowed from the bank. Now he's having a really hard time paying his mortgage. On top of that, the market has changed and his house is worth $200,000. He owes more than the house is worth. That's called being underwater, upside down, or having negative equity. Being faced with losing your home is a horrible feeling. Riley's a little desperate and confused. What are his options? 1. He can try and walk away and force the bank to take the house back. That's called a foreclosure. But this has many lasting effects, including the possibilities of future collections or wage garnishment. 2. He can work with the bank and a qualified real estate agent to sell his home. Often banks will accept less than what is owed. That is called a short sale. Riley may feel he will lose the house either way if he falls behind on his payments. So why should he care? This video explains the important differences between a short sale and a foreclosure, and why it's in Riley's best interest to care very much. Riley probably feels like he'll lose the house if he falls behind on mortgage payments, but that's a misconception. The banks and government are trying to find solutions for people like Riley, and the options are continually changing. Banks will consider circumstances like loss of job, reduction of wage, illness, and many others. If one or more of these applies to Riley, he may be a good candidate for a short sale. Of course, Riley's other option is foreclosure, which is really bad for both Riley and the bank. Banks aren't in the housing business. Foreclosures are incredibly costly to them. Neighborhoods become blighted and values can plummet across entire communities. For Riley, the consequences are even worse. A foreclosure has both immediate and long-term effects. He could pay tens of thousands in higher interest rates for any credit in the future. The foreclosure may be on his permanent financial record. His future employment, or even maintaining his current job, could be affected by foreclosure. If Riley and the bank can reach a short sale agreement, they both come out better. Riley avoids the awful short and long-term effects of a foreclosure, and the bank avoids the costs of taking a house back. Riley's living day to day worrying about his mortgage. He may not have even considered that short sale is an option instead of foreclosure. The best thing Riley, or anyone in a tough mortgage situation, can do is to take action to understand their options. An experienced real estate professional, like the agents at Assist to Sell, is a great source to understand your options. If you're stressed over your mortgage, don't wait. Call your local Assist to Sell agent today and get some friendly, professional advice.